Good morning, everybody. Welcome to the Flow Show. It's Fed Day, Wednesday, 19th of March, and getting ready to do battle with that one. Coming off the back of the BOJ this morning, overnight, wherever you may be. So we'll go through all those headlines right now. I think we'll get started. Hope you're doing well this fine morning. First, we're going to look at a bit of data out of Japan just to keep things ticking along. We had the Tankan index coming in at a -1 versus 3 prior. This is a data point that the BOJ pays close attention to. Non-manufacturers, i.e. services, the Tankan index, that dropped to 25 from 30 last month. We also got some machine tool orders. They're the core orders coming in month on month, down 3.5%. So not looking good on that front. Trade balance as well, another surplus, turning around a massive deficit last time. A lot of shenanigans going on here with potential front running. As you can see from exports up 11.4% while imports were down. So we've been looking at the US trade balance data, which has been showing bigger deficits because their imports have been larger from firms getting goods into the US from abroad before tariffs bites. Well, this is the flip side of the coin, that countries like Japan are exporting to those importing countries like the US to beat the tariffs as well. So this is the two-sided effect that this tariff front running has. Big import countries like the US see imports rise, big export countries like Japan see their exports rise. So US imports rise, foreign exports rise. So that we can see the effect going through to that. Anyway, Bank of Japan left rates unchanged as expected. In the actual statement itself, there wasn't too much change within that. They still see the economy recovering moderately, albeit with some weak signs. They say exports and output is moving sideways. Japan's economy likely to continue growing above potential. It says there's uncertainty surrounding the economy. Prices remain high. They say the risks include the trade policy of each country and its impact on overseas economies and prices. They say that consumption is increasing moderately as a trend, and that inflation expectations heightened moderately. They say that the income to spending virtuous circle is gradually intensifying. So overall, they're seeing positive signs in terms of what the economy is doing, but they still see the same old moderate recovery and some weak signs. Now, Ueda was out after all that, and he started off sort of moderate himself. He said, we'll keep adjusting the degree of easing if our economic and price outlook is to be realised, i.e. saying the same old line that they will hike as long as all their forecasts and whatnot come to fruition. But then he took a slightly more bullish, hawkish slant about things. He said we need to be aware that rising food prices, including rice, could change households' inflation expectations. He says that there are risks that these rising food prices could affect underlying price trends through changing inflation expectations or mindset. Now, that is a fairly big comment for Japan because their mindset has been in a pretty much deflationary spiral for years. So what he's saying is people are seeing higher prices, and if they are thinking higher prices are going to come, then it could change how they act in terms of spending and whatnot. So if they get an inflationary expectant mindset, that can lead to higher prices down the line because firms are willing to raise prices more if consumers are expecting it, and consumers will not mind so much paying it if they know it's coming rather than it being a shock. So that's a little bit of a hawkish tilt or addition from Ueda there. He did say that on the wages, that the strong momentum of wage hikes is spreading to smaller companies, which is important because the government particularly want to see wages growing at small companies because they make up the bulk of firms between small, large, medium in Japan. So it's no good big firms raising wages if 70% of the economy is smaller firms and they're not. So he's highlighting that wages are going up at smaller firms. Then he said, we'll keep scrutinising the impact of US trade policy on the US and global countries and Japanese economy as well. They will decide policy stance while assessing the tariff impact. So that, like a lot of central banks, has been injected into their thinking. He says wage trends are on track or slightly stronger. Again, another bullish tilt there. It says there was a view at today's meeting that there was upward pressure on inflation. It says wages and prices are broadly on track. So the Rengo results, the initial results, were stronger but within expectations. They now see underlying inflation between 1 and 2%. That's an important comment because their whole policy stance is to see inflation stably at or above 2%. So underlying inflation is at between 1 and 2%. So they're not at that stably line yet. They say the rise in services prices is not very strong. Additional upside risks could lead to faster rate hikes, and they want to review their outlook by looking at data towards early April. So, all being said, I think the door is open for an April cut based on what they're saying. Things are still moving slowly the right way. The wages, they're going the right way. Inflation is going the right way. Mindset is potentially going to be going the right way. So it's all leading to them getting towards another hike, or at least continuing to end their easy policy and tighten policy. So there's obviously a lot of caveats, as always, with these guys. Again, it's always going to be a slow process, but even just that comment that they'll be looking at their outlook on early April data. We've got another meeting 6 weeks' time in April. So I think it's going to be a live meeting. You never know, they may kick the can through to May, but I think April, May are well in the frame now if the data continues to play ball. So that's where we are with the Bank of Japan. We're potentially on the way to a hike, maybe over the next 1 or 2 meetings. We'll talk about what's happened in the yen in a little bit. Apparently, Rachel Reeves has won over her cabinet because they've all agreed the package that she wants to put forward to cut the welfare bill. This is the big thing going on at the moment. So she's won over her cabinet, at least. I think obviously includes the PM. My big question remains, can she win over the market next week? And that's going to be the main one that's going to swing things as to whether the market likes it or doesn't like whatever she's going to be flogging. Just to emphasise what a bonkers situation she's in, particularly regarding this welfare bill. So last budget, she obviously declared raising national insurance, which has raised costs, employment costs for firms, which has already led to job losses and whatever. And this welfare bill is aiming to get some 11 million people off of welfare benefits and back into work. So how she squares that away when you've just raised employment costs for workers and weakened your jobs market, she now wants to put 11 million people into work, so they're off welfare in a market that is weakening and firms are not wanting to take on more costs because of those national insurance increases. So you can try and square that away if you like. I'm struggling to, and I can't see how the market is going to come to a better conclusion than that next week. But that's the situation she finds herself in, and can she succeed? Doubtful, but there you go. Right, we've had 2 disappointing market moments, shall we say. The first one was yesterday afternoon, after lots of toing and froing in Germany. They passed their reform of borrowing rules, i.e. the debt brake, enabling this 500 billion infrastructure fund to move forward. So we're all waiting to see what happened. Euro moved about 30 pips in the end. Went up a little bit and it came down a little bit, and that was that. So no big move there in the euro after that. Didn't go rocketing off to massively new highs, 110 or whatever. We just faffed around a bit. So very disappointing price reaction to that news. That was disappointment number one. I'll get to number two later. Coming back to the data and today's data, we had the final numbers from the Eurozone CPI, and the only thing of note was that the headline number came in a pip lower than the flash number, 2.4, which puts it down 2 pips over last month. The core number stayed unchanged, confirming the pip drop to 2.6%. So nothing to write home about there. Yesterday's data in the US. We had a bit of housing data and obviously the Canadian CPI data. Start with the US stuff first. Building permits coming in slightly higher than expected, though down on last month. Housing starts increased to 1.5 million. So a healthy looking starts. Again, possible seasonal stuff going in here. Housing starts, for those that don't know, is when actual ground is broken. Obviously, with some of the weather events and stuff going on over there. This is obviously an early part of the year as well, so it's not unusual to see an increase in activity at this time. Either way, green numbers, nothing shocking in that lot. We had some price data as well, import and export prices. Year on year, export prices a little bit softer. Those import prices, though, were a bit hotter. Again, the other side of the trade thing that I just mentioned with Japan, a lot of importing happening in the US, and so no surprise to see import prices rising as people pay more to get stuff in quickly. Canada CPI was a bit of a shocker. Headline CPI was expected to come in 2.1, came in at 2.6%. Now, I did read certain propeller heads and Twitterers who said this might have even gone above 3% if it wasn't for some federal subsidy things that were knocking around that time to lower prices in certain aspects. So this could have been even higher. The core number, the BOC core, jumping to 2.7% from 2.1%. As you can see there, all the measures coming in pretty hot, much hotter than expected. That was also a bit of a disappointment for the loonie. It dropped to about 30-40 pips for about 5 seconds and then bounced again. I would have thought we would have had a big old break in the bottom of the zone, which I'll show you in a bit, but we didn't, and it didn't last either. So we can't even trade data for 5 minutes now, and strong data like that. Over in rate expectations for the BOC, the Canadian swaps market now sees only a 30% chance of another cut in April, which was at 43% before the data. The BOC already hinting that they could look at going on pause. This has probably swung it for them. So I would potentially expect them to stay on hold at their next meeting. Bit more data, industrial production from the US. Again, positive numbers, all nicely in the green, beating expectations. Manufacturing, industrials, capacity utilization up nicely as well. So all looking good there. Now, industrial production, again, can be a bit affected by the weather and stuff. It is, a lot linked to utilities and whatnot. And maybe a bit of surprise also in that manufacturing number, given the weakness we've seen in the manufacturing sector overall. But still, there's still no numbers here within the US that should get the market too worried, as it has been of late, about things. US Treasury Secretary Bessent says for some countries the April 2nd tariffs may be low. He says reciprocal tariffs won't be automatically 25 plus 25. They say each country will get its own tariff number, and says 15% of countries will make up the bulk of tariffs. Then he was questioned about his comments on whether there's going to be a recession. He said asking for a guarantee there won't be a recession is silly. And he says there's no reason for there to be a recession as the underlying economy is healthy. This goes against some of his earlier comments where he didn't forecast a recession, but he said it may be possible that they get one. Not going to rule it out, which the market took a bit negatively. So he's just clarifying those comments. Italy's PM Meloni is one of those ones who has decided to take a bit more of a pragmatic approach to tariffs rather than fighting fire with fire. She says it's not good to respond to US tariffs with EU tariffs. Would prefer just to go down the negotiation route. She's joining a few others who have now started to take that line. Von der Leyen, EU's von der Leyen, says Europe needs a strong defence posture by 2030. Only the 5 years away to get their shit together. She says readiness 2030 means rearmed and developed capabilities to have a credible deterrence. So yeah, 5 years they want to get that going. Typical EU. I'll be a buyer of 5 years as well. I'll be 7 bid. Right, here we go to disappointment number 2. We had the Trump-Putin call, which went on for quite some time, 90 odd minutes. Then we started to get drip-fed some bits and pieces on Twitter. A key Kremlin envoy indicated that the Trump-Putin call was being seen as positive in Moscow. Then the Kremlin and Putin were out after the call, saying that Russia and the US are to set up expert groups on Ukraine settlement. Putin's ready to continue searching for ways to peace. Said he would support the idea of not attacking energy facilities. So the early comments didn't sound like there was a truce coming, but then we got a bit of a turn. He said a number of points concerning ensuring control over a possible ceasefire, and there must be a way to stop Ukrainian mobilization and the arming of Ukraine. Then apparently he agreed to halt attacks on energy facilities for 30 days. And then Trump came out saying that he was agreed to begin talks on Black Sea security. Russia also underlined that the key condition of settlement was a complete halt of foreign military aid and intelligence to Ukraine. So this is one of the conditions Putin wants regarding a truce. The White House obviously came out with their bits and bobs saying talks for Ukraine ceasefire to begin immediately. So we haven't got a ceasefire, although Putin said he agreed not to attack energy facilities for 30 days. I'll come to that in a minute. But Trump has said that they agreed to an immediate ceasefire on all energy and infrastructure, with an understanding that we will be working quickly to have a complete ceasefire. So overnight, what happened? Ukraine sent a load of drones over and attacked Russian energy infrastructure, an oil terminal, and Russia attacked a energy terminal at the Ukraine railways, knocking those out. So, and since this morning, we've just had tit for tat that Russia has attacked Ukraine energy, and Russia saying that Ukraine has attacked Russian energy. So this 30 days energy ceasefire hasn't lasted 24 hours. Zelensky's obviously had some comment about that as well. He says that Trump's call with Putin shows Russia is not ready for a ceasefire, and they will strike back if Russia hits energy infrastructure. Says Ukraine and Russia may stop energy strikes if the US mediates. He's going to be looking to speak to Trump today about further details on that phone call. So he would like to talk about the Russian proposal. Trump envoy Witkoff says that talks with Russia on the Ukraine war are going to take place Sunday in Jeddah. Unhelpfully, Russia's one of Russia's ministers, Medvedev, he's like security minister or something, said that the Putin-Trump call shows there is only Russia and the US in the dining room eating Kiev-style cutlet as a main course. Hardly anything taken away from what's going on over there, more adding fuel to the fire. And yeah, the funniest comment, as they just pointed out, Putin said that he put forward and Trump agreed that they should get back to playing US versus Russia hockey games. So that's the level of the conversation they've been having, talking about ending a war, more worried about hockey. So where do we sit after all that? Well, it might be a bit of a sign of the moves going forward. We had apparently an energy ceasefire that lasted 5 minutes. We haven't got a full ceasefire. That's still to be negotiated. Meanwhile, Russia and Ukraine are going to continue fighting. Russia trying to grab as much as it can before any ceasefire and any deal is put in place. More talks coming, more headlines coming. But again, the market reaction to that, even though it sounded like we had a bit of a ceasefire, very limited. And that's where we are now. So two big, fairly big, potentially market moving events, both had limited market impacts. Probably more so because one was expected, i.e. the German stuff, and this Ukraine stuff isn't really a solution. It's just all half-assed promises that are already broken and more talks coming. So that's about it, thankfully. All the rest is the usual Trump stuff and tariffs and this and that and the other, but nothing that's too market moving. Yeah, you have to talk hockey, Rick. Of course, never understood that game. A game that has 3 halves. Aren't they called thirds in English? Anyway, before I get into a row with all our American friends who are up nice and early due to the clock change still, let's go and have a look at some prices. Well, let's have a look what's coming up today on the data, which I don't think we got an awful lot, actually. Nope, nothing much at all. NBA stuff, which just keep half an eye on because that's been running quite hot the last couple of weeks. Again, could be just some New Year seasonal stuff coming in. But other than that, we're just running up to the Fed later on, where they are expected to keep rates unchanged. By and large, this is one of those meetings where you have an idea what you think Powell might talk about, but you realise that he probably won't, and this is probably going to be one of the most boring Fed meetings you can get. The market also will want to hear things. Is the economy doing that badly that's going to push them towards sooner cuts? What are the dots going to do? What are the projections going to do? All that sort of stuff. I don't think there's going to be any major changes to the dots. What I think we might see is a bit of squeezing, shall we say. So some of the more extreme hawks and doves on the Fed board may just sort of close up on their dots just to emphasize that keeping rates on hold for longer. We're still going to be looking at whether we're getting 2 or 3 cuts, whether there's any change to that. I don't think either we'll get any change to that as well. We may just get a bit of, again, in price move terms, we may just get a calendar jiggling around as to whether the first or the next cut will come in June, July, August, September, December, whenever, October, whenever the meetings are. That's about all we'll get, I think, price-wise. Never say never. Powell could pull some lines out. My thinking, but probably won't happen, thought is just the market has been in a bit of a sour mood of late regarding the US economy. So maybe he may want to push back at that by saying, hang on a minute, things aren't that bad. But then he could leave things alone, because if the market is artificially reducing financing costs, and we always talk about finance costs generally, then it's doing a bit of easing for them without them having to do anything at all. So he may let that slide. So I'm not expecting fireworks from this meeting. As I say, we never say never with these things. It's going to be an hour earlier for us over here in Europe, in the UK, so I can actually have my dinner afterwards rather than having it during the meeting for once, which I'm looking forward to. If you have any thoughts or questions about the Fed later on, put them in the chat here on Zoom, and I'll get round to those if there's anything you're expecting. The only other thing people have been penciling, shall we say, for looking at is whether they mention QT, whether they're going to slow that down. Again, that's a little bit of a dovish move if they slow QT in terms of not continuing to reduce the balance sheet, keeping a bit of liquidity in the pipe, shall we say. That might be seen as a little bit on the dovish side. Again, it's a bit of looseness without actually doing anything with rates or changing the overall thinking. So that's going to pass by. Keep an eye on yields, of course. Let's have a quick look at those. Anything that's a bit hawkish is going to see a rally in yields, depending on where they are. Probably better off looking at something like the 2-year at the moment, because with Fed's rate staying unchanged, if you get something that's pushing yields up, particularly in the short term, so something hawkish, we're getting up above 410, getting up to where rates are currently at, then that might be a bit rich in terms of the dip you're seeing in the price. This is something I highlighted on the trade-off show this week with Michael. 2-year yield, if we get a rally in that, that might be something to look at for buying a dip in the price. Because rates will eventually come down if all goes according to plan. The Fed do not want rates up here for longer than they need to be. They want to get them down to a neutral level. So all being well, it is going to happen eventually, unless something goes wrong, and then that's a different kettle of fish altogether. But by and large, so any rally you get in yields is potentially going to be seen as an opportunity for bond traders to buy the dip, particularly in the shorter end. So keep an eye on yields there for one thing, because where those go, the dollar's probably going to follow. But is Powell going to change the mood of the market completely? If he doesn't, again, any rally in the dollar is likely to be a selling opportunity for a lot of people in the market. Right, let's go back to the BOJ stuff and what happened. Not huge amount of moves. Let's go into the short time frames. So we had a little pop up to 150, knocked that on the head. Old level up here, as you well know. We've played around this area plenty of times. We were up there on Tuesday. We went up there again today. Still couldn't get through. Then you either turn in a bit more positive. We had a dip down towards the 149 area, got through that 20 area, just about that 20 level, the old fib level, but couldn't even make it to 149. So support around the figure, still holding strong. And here we are messing around between the two big figures, 149, 150. What happens from here? It's all going to be down to the Fed, really. But I think if there's some BOJ staying on hold in this move that we've seen, then we might see just a little bit of a switch. So we might just see some a bit more rally selling if the market is getting geared up for a hike coming in the next month or two. I'm not expecting this to fall out of bed just on that basis. We've also got everything else going on: geopolitics, risk, tariffs. This is Sheba stuff, underlying currents. So I don't see that this trend or this bounce that we've had from 147 is going to be in any serious trouble, unless maybe Powell takes a dovish tilt. So I would not be surprised if we continue rallying with this, but we're still in this big yearly downtrend so far. Okay, this hasn't yet started breaking, and I'll keep coming back to euro dollar, and when we fell from 112 down to the 102s, okay, we stayed down there pretty long, then we broke up about 105 and we started carving out. Let's look at that, and then you can see what I'm talking about. So we had this trend down, 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 and it wasn't until we started breaking up above some of the key levels, some of the fibs, which I've taken off the chart now, that you see that you got a trend turnaround. But some of the price action was indicating that we'd stop going down. We may have that in dollar yen. Okay, and I've pointed out around this 147. Okay, we may have that, but it's got to do more. And this area here, these fibs here, 38.2. This one's more important, the yellow one, because that's the downtrend, and the other one's the uptrend. So this 38.2, the yellow one, is going to be important. If we start breaking that, then we potentially turn this around. But if we can't even get there, then this trend is potentially going to continue lower. Euro yen did a lot of driving, as we've been pointing out on the show for quite some time. It's been a big driver of particularly euro dollar at times, and we had a similar move. We had this level up towards the high 163s, couldn't get through it. We've had a couple of little nicks through 164s, 164.10, 15, but we went up there on the BOJ, then we dropped back to support around this little area here, around the 161s, 162s, held that. We've bounced back, but we've held that 163, just below 164 again on the bounce. So we're give or take bang in the middle of that range, a little bit above it, the middle of that range. This one saw euro dollar coming down to test support. Got a bit of confluence there. The 55 H4MA and my old zone came down to within 4 pips of that zone and held it before we bounced back. What's happening here is we've still got the bullish momentum going. Okay, you can see after this, strong move, we're just still in a bit of an uptrend. Okay, I'll just stick a couple of lines on there just to visually show that. Let's take that off because I don't need to be too specific. So we've got still in a bit of an uptrend. Okay, give or take these highs, but it's a bit more sideways. But as you can see, it's still going up. We can't hold above 109.40. Okay, and I've been banging on about this level since before we came to it. Okay, we've had probably 3 goes at trying to get above there and trying to stay above there, and we can't get above there. Okay, so the battleground is still the same. At the moment, it's top of the zone up to 109.40. Okay, but we have come through this 109.40s pretty easily now. We did make new highs yesterday, which keeps the momentum going, but I still think it needs something more. So we've come through a potential truce. We've come through the German vote, and we haven't really managed to push on. So it's looking a bit more balanced at the moment. We're still keeping the uptrend, but we need to do something more. It needs something more to keep going. And if it doesn't, and if we can't get through this 109.40, 50 zone now, then that's potentially going to get sellers coming in and saying, right, well, we need to take a bit more profit off, and maybe we see a steeper pullback. But for now, we're holding the top of the zone. I missed having a go there. I was looking at another quick retest and hold to see to try for a bit of a long add to the wrong position, but we haven't got it. I'm not going to touch it now because the closer we get to the Fed, liquidity is going to die off, and outside of any big headlines, the market's going to have its eyes on the Fed, and no one's going to push the envelope until we get to that. So if you're looking at trading today, you've got to be quick if you get any profits, because if you do get a move, then it's going to die pretty quickly afterwards, and you don't want to be sitting in a nothing position for the next 4 hours until we get to the Fed. A couple of other pairs I'm going to look at. Dollar MEX, which I'm still running my shorts. Technically, very nice moves as far as the levels are concerned. We got it's gone on wonky. We got a bounce off the 84 low, okay, which had a run yesterday up to the 2009 level, which is the bottom of this zone. Okay, so technically, that's what you want to see if you're a short like me. You get a decent move, a decent break. You want to see that break confirming and holding. Okay, and it's done exactly that. This is technical perfection, if you like. Now, if you are looking at the long side, what you'll be encouraged by is that we've had a low, then we've stepped up that low, and then we've stepped up that low again. Okay, so it's looking like for now, in the short term, we're done going down, which was something I have been warning about. We still got the tariff threat hanging over. We still got a deadline. The clock's still ticking to that April 2nd deadline, and we're probably going to get back to trading that in earnest next week as we close off the month and enter, you know, a few days before that deadline. But on the other side, we've had that high or that bounce to old support. Now we've had a step down as well to another level. We're holding resistance 2001, 2002. So this is a bit more balanced, a bit of a coin toss now. Okay, we've stopped going down, but we can't go back up through the key levels. So it's going to need something. Take your cues from this one. If you're breaking above 2009, 2010, then we're probably going to go back into the range and then mess around in there. It's going to need a break of that low 2084, 85 to get us going the other way. If we hold any of these little lows again, then you're probably going to be setting up for a bit of range trading. But the longer we hold these lows, the more chance we have of breaking back up and going a bit higher. So a bit of a balanced one there. Aussie Kiwi, Aussie dollar. Well, we'll have a look at Aussie dollar while we're here. Still failing to get through that 64 level. And as you can see, a bit of a pullback because we can't do that. This might be a bit significant that we couldn't get up towards that high, couldn't even really put in a proper test of the 64 level. So that looks weak, that we can't hit that high at least. But again, we've got this stepping up business going on. So something's going to give at some point. We're either going to come back down to this zone. And if we do, we might see a break because we'll be coming back pretty quickly. But we've still got these areas to keep an eye on. But unless I'm getting more thoughtful about putting a buy stop somewhere above 64 now, because if we do only dip fairly shallow and we come back up here pretty quickly, it would potentially indicate that we're going to be heading for a break. So this is a bit like what happened at the 105, 105.30 in euro dollar. Although that was driven by big news, that's what you want to see when a decent area of resistance breaks. You want to see a good old shove through. So I'm thinking about it. I'm thinking about potentially going with a buy stop, but I'm also going to be mindful of this level, 64, 40, 50 area, which was a pretty solid support point before the break. So any buy stop above here, it's got to get through there as well. But who knows? I may even look at a dip to this area down here and see if it holds again, because that might give it the springboard. So a lot of these pairs are sort of 50-50. They're in the balance at the moment. They need some extra impetus, much like Aussie Kiwi. As you know, I'm still short this. We had a little break at this 30s area. Couldn't quite get down to my next level, which is just above the 109. It's, again, looking like it doesn't know what to do right now. We can't put in a proper test. This 109.50. So the bounce so far is looking weak, but I want to see us making a fresh low. If we do that, then we're going to be continuing. If we can't, and again, just a little step up from that low to this one. It's only a few pips, but that's all it takes sometimes. So if we get a couple more holds down here, that to me is going to indicate maybe we're done with the downside and we see a bit of a steeper pullback. Brand cable. Brand, after being here now with me for, 3 years now? Maybe nearly 4 years. You should not need me to tell you what's happening in cable. But I will do it anyway. No real change. Similar to the euro, we're getting up to these levels. 130, still a tough nut. Can't get through it. And if you can't get through it, then you get steeper pullbacks. In cables terms, 30, 40 pips isn't a massive one. So we're still holding up. Again, didn't quite or haven't yet quite got down to that low. So this is another one that's just in a shallow uptrend still. So the price is still, or price action is still looking bullish, but it's got to take out these levels, and we can't do that. The longer it goes, the greater the chance then that we see a further or steeper pullback, and wherever that may lead us to, there's various levels to look at on that. So you could look at this for dip buy. Again, though, be careful with this Reeve stuff next week. It could be a real big pound mover, and that's one I'm keeping an eye on myself. May even look to get in some euro sterling on a bit of a dip if we get a decent dip. We had one again. This was driven by euro yen and what happened in euro dollar. Yen pairs doing a lot of pulling. This was a bit of a speed move. One time when euro dollar went faster than cable, hence why we saw this coming down and then bouncing back. So maybe if I see something, I don't know, down 83.60s that isn't headline driven, I might think about getting long on the run it into next week and this stuff from Reeves. But these are still fairly minor-ish levels. I'd love a move down there, but obviously if we're going down there, something serious has happened and I probably won't want to change it. Let's look at gold. That's continuing to go. Again, this one I was looking at, let's keep it on the hourly. This one I was looking at yesterday to see what reaction we would get to any potential truce peace headlines from Russia, and what we got was not a lot. So there's no real reason for anyone to pile in. And the reason I was looking at the reaction, because I wanted to see what would happen to gold on a risk-on situation, where if we're heading towards truce and peace, that would be a risk-on move. Would that be enough to send gold down? If you don't get a big reaction on risk headlines here, that tells you that fundamentally we're still bullish and we're still going higher, and that the risk part of this trade is lower than what looks like the fundamental part of this trade, which is China buying gold, other central banks buying gold. So every move tells a story, and not seeing that bigger move yesterday, or any sort of move yesterday, it did look like it might want to go lower on a good headline, but it was a bit messy. So keep an eye on this one. If it doesn't go down on a strong headline, like a full signed, sealed and delivered 30-day truce and promises of peace thereafter, then you want to be careful shorting it on the risk side of things. But for now, might be setting up a little bit, probably stick a new line in there. Let's just do that, just to keep an eye on things. Just call it around there. Don't need to be that specific. Just looking at where the support points are coming in. We know we've potentially got one there. We know we've potentially got one here. But this one's a bit very short term, bit loose. Highs still this 30-40 area. You know, we're just nudging across here. I can stick a line in there if you want, because you know I like to build the picture as we're going along. So we need to get above there and start holding above there. Do that, then you get a similar thing here where you make a high, but then you make new highs and then you find support. So doing that old stepping up stuff. This is the level we need to get above 38. Get above there, hold it, then maybe we're going to continue pushing on. But I still see no real reasons to be picking tops in this one, unless this one develops further. So we've already got evidence, you know, this 38 is a bit of a level. You know, if you want to try scalping it between the two goalposts, small trades, then be my guest. But I wouldn't be shorting it here, shutting my eyes and thinking it's going to be going to 2,900 anytime soon. Okay, so we're not done with the upside in this yet. Come on, guys, you've all been very quiet. Anything else you want me to look at? If not, I shall call it a day. Don't keep me hanging while I'm here on my own. I need your input as much as you're looking for mine. Quick look at oil, because that's not managing, still not managing to bounce. We're still faffing around this zone. We did get a rally yesterday. Still can't get and hold through 68. Did manage to push up. Okay, we matched this high here. Okay, so I've been talking about this range between this 65.20 and this 68. We did manage to sort of push through the 68 level, but managed to just match that high before coming all the way back down again. Again, this is another one you want to look at in regards to what's happening with peace and whatnot. Obviously, whether they're hitting energy infrastructure is going to be a bit of a player here as well. But as you can see, we are not ready to bounce significantly just yet. Although again, we're just in a slight, very, very slight uptrend, but we're still not resolving around this zone for any significant amount of time. So again, take your cues from that. You need to be getting and holding above 68, then you might be going higher, or we risk still some of these levels and these lows. But it's held at the top of the zone. Sorry, the bottom of the zone for now. So that'll give bulls something to keep an eye on. Right, that's it then. Thank you very much. I will have a special guest tomorrow. Get my old mate in, Michael Brown. He's going to come and moan about the BOE meeting for about an hour. So get the coffee on. No, joking, of course. Do join us tomorrow's show, and we'll be giving our insight over that. Have a great day's trading, everybody. Stay safe. We'll see you all later, and we'll see you tomorrow.